Welcome to the Financial Markets Exposed. Tonight is going to be a very, very serious call, and you are going to want to pay very close attention during all of this call. My name is Andrew Cowabunga, and I'm going to start you guys off with some information that you were never meant to find out. You were never meant to know about. We're going to be talking about some big things tonight. We're going to be blowing the doors off the entire monetary system, off the financial markets, off the banks, and even off the government. So you came to the right place, and I'm excited to take you guys through this journey down the rabbit hole, one of my favorite places to be. So who are we? Well, we are the outlaws. And we are the ones that put this call together to inform you about what's really going on. We are a group of entrepreneurs, investors, fun, like-minded people from across the world with a mission to spread financial awareness. So the agenda over the call today, what we're going to cover, number one, is how the money system actually works. This is going to completely floor a lot of you guys. Most of you guys don't even understand how the money system actually works, all the way through to money creation, inflation, governmental regulation. We're going to be covering that first. Number two, we're going to be covering what the banks are actually doing with our deposits and our money. Number three, we're going to cover what are the foreign exchange markets and how they are beneficial to you. And number four, we're going to cover how to take your financial power back. So the first thing I want to talk about, guys, is a dollar's worth. Now, this is something I'm sure everyone's aware of. If you are watching the news right now, you're watching record high inflation, you're watching 42% of all the dollars that were printed in existence were printed since 2020. So 40% of our money supply was printed since 2020. So if you guys can see right there on the chart, in 1913, we went off the gold standard, which I'm going to show you guys in a little bit. So 1913, and you can see the power of the dollar right there has steadily been declining over the years. Now, what does that mean? Well, it means that your dollar buys less. If you think back to, say, your grandparents or your parents even could probably buy a house for $10,000, $15,000, $20,000, could buy a beautiful house. A house today that might cost you in the millions or in the 600, 700s of thousands could be bought for tens of thousands back in the day. Now, why is this? Why did milk used to cost 20 cents? Why did a hamburger cost 4 cents back in the 20s? Well, because the purchasing power of the dollar was more. And through fractional banking, through Federal Reserve, through taxes, the government is able to steal money from you every single year, and you're not even aware of it. So how does this start? How do we create money? Most of you guys aren't aware of how money is actually created. Most people don't even know, and you know why? The government doesn't want you to know. All right, so picture an election, right? So there's politicians out there. You got the Republicans, you got the Democrats. Everyone's promising, I'm going to give you lots of stuff, right? I got this for you. I got this for you. Somebody else says, I'm going to give you more. Each politician saying they're going to give you more. Politician gets elected, they have to find the money to give you those things. So the government needs to create bonds to cover deficit spending. Now, what is deficit spending? Deficit spending is money that doesn't exist that's being spent on public works, schools, roads, other things, and all the things that were being promised by the politicians. So, number one, step one, the government needs to create a bond to cover the spending that the politicians are doing. Politician spends $1 trillion, government needs to create a bond for that money. So a bond is a glorified IOU. The government creates a bond. The bond is like saying, loan me $1 trillion today, and I promise over a 10-year period, I'm going to pay you back that $1 trillion plus interest. So Treasury bonds are the national debt. Basically, this is stealing prosperity from the future, because what we're doing is forwarding a bond that has to be paid back at some time. Step two, the Federal Reserve creates money out of thin air. I want you guys to read this. When you or I write a check, there must be sufficient funds in our account to cover that check. But when the Federal Reserve writes a check, there is no bank deposit on which that check is drawn. When the Federal Reserve writes a check, it is creating money. This is from the Boston Federal Reserve. How many people on here know that the Federal Reserve is a private entity? It is not owned by the federal government. This is not a federal agency. This is not an agency of the government. This is a private entity that in the year 1913 was created to give a group of bankers power over the money system. Now, what does this mean? They can create any money that they want. So the government sends an IOU to the Federal Reserve. The Federal Reserve creates a check off an account with no money in it for, let's say, $1 trillion and sends it back to the Treasury. The Treasury prints $1 trillion in money. This is where money comes from, guys. This is money is created out of thin air. Now, what does that mean? Well, the Treasury deposits it in the government agencies. So when you deposit in the bank, when anyone deposits in the bank, you're loaning the bank money. So the government is taking a loan and giving it back to the bank. Step four, big governments spend and deposit in the banks. They pay for all the government programs, government employees deposit their checks, government contractors are paid, everyone goes and deposits their money in the bank, right? Now, here's the crazy part. Fractional reserve lending. This is how more money is created out of nothing. So banks multiply money and continue to lend and multiply with interest. Now, what does this mean? We're going to pull up the calculator. Now, let's say you deposit $100 in the bank, right? So the bank only needs to hold 10% of that, and they can lend out the rest. So the bank holds $10 on deposit of your $100, and they lend out $90, right? So they give $90 out to someone else. So technically, there's another $90 in circulation. So that $100 that you deposited in the bank, $90 was created by the bank out of thin air and is put into circulation because they're holding a reserve on your cash. Now, stay with me. That $90 is loaned out to someone who, say, is going to go buy something, obviously larger amounts, but they're going to go buy a car, they're going to go buy a home. They give it to the lender. That lender deposits $90 into their bank, and the government needs to hold how much? 9% of that deposit, and they get to deposit what? $81. They get to lend out another $81 from this bank. So there's another $81 created out of thin air. This continues over and over and over. This is how the banks even create more money out of nowhere. They're not even required to keep your deposits on hand, only 10%. So if there was a run on the bank, if you went to take out all your money from the bank and everybody else did too, the bank would collapse. This is what happened during the Great Depression. The banks would collapse because they're only holding 10%. Some are even holding less. Some 3%, some 2%. The bank would collapse. They cannot fund out 90% that they don't have. They've given it all out. And this is absolutely approved by the government. So the banks continue to create money. So every $100 that's in existence might have $1,000 created. So picture that to the tune of trillions that they are printing. Picture that, guys. $1 trillion printed might have 10 times that. That's crazy. So this is the way inflation actually works in action. A lot of times we're seeing inflation and we don't understand. What is inflation? Well, inflation is just adding more currency. So inflation is currency expanding throughout the markets. Inflation isn't prices. Prices are the result. Inflation is adding more money into the system. So each dollar that's into the system, your dollar is worth less and less and less. So if you see there at the top, when currency is deposited in the banks get to lend it out, like I just said. Then it gets redeposited and relent again. It gets redeposited and relent again, redeposited, relent, redeposited, relent. People are depositing their paychecks. They pay for goods, that person deposits, the bank gets to lend out another 90%. It creates bank credit, continuing bank credit over and over and over again. So this is where the vast majority of our currency supply comes from. The Fed creates it and the banks create 10 plus times more of that currency. This is inflation in action. This is your money devaluing every single year, every single month. This is your buying power diminishing. So in 1913, I bet you guys don't know this. Before the year 1913, I don't think anyone on here was alive in 1913. Before 1913, there was no such thing as income taxes. You kept all your money. No such thing. In 1913, they created the Internal Revenue Service. They created the Federal Reserve Bank, and the Constitution was amended to allow income tax. So it was allowed for citizens to pay 30, 40, 50% of their income to the government. This did not exist before the year 1913. If you were alive in the 1800s, you were not paying out income tax to the IRS. A lot of people don't know that. They think, oh, the IRS, it's always been there. It's a government agency. No, this is within the last a little more than 100 years. The government's been able to take almost half of our income, and what are they doing with it? Well, they are paying it directly back to the Federal Reserve in interest. So I'm not sure if you guys have seen very, very old money. This is a dollar from 1928. This is a $20 bill. $20 in gold coin payable to the bearer on demand. So this was a gold certificate. 100% of our money set up through the Constitution when they started the government, 100% of our money was backed by gold or silver. It was backed by metals. So back in 1920, you could take this $20 to the bank and exchange it for a $20 gold coin. So everything was backed by metals. That was taken away and our money became Federal Reserve notes. If you look at your money now, you cannot exchange that for gold. You cannot exchange that for silver. That is a Federal Reserve note payable for debts. So it's a note. It's no longer money. It's a transaction. That's the gold standard. That's what was taken away, and that's what has changed our entire money supply. That's literally what's created inflation. So, like I said at the beginning, a dollar's worth has completely been declining. If you see since 1913, when they created the Federal Reserve, they created the Internal Revenue Service, and they've been printing money nonstop, your dollar power is completely diminishing over and over and over and over. Every single minute, every single year, every single hour, the power of your dollar is diminishing. Now, what does this mean? Well, you might be sitting there saying, wow, sounds kind of like a scam, right? Government's taking my money. I feel completely scammed. What do we do about this? Well, I'm sorry to say, there's nothing you can do about it because it's the system that's there, and it might be a scam, but it's the system we're living in. So that's why we're blowing a hole through the bank. That's why we're blowing a hole through the financial markets and exposing them on this call, because what we're going to show you here in a few minutes is how you can actually capitalize on this, right? And you're thinking, how can I even capitalize on this? How is it even possible? My dollar's decreasing in value. I put $1,000 paycheck in the bank and the bank loans out $900 of that and they only keep 100, and then somebody else deposits and then it's 1,000, then it's 10,000, then it's 20,000. This money's not worth anything. How do we get out of this system? How do we stop this system? Well, as long as this system's in place, if they want to decide to go back to the gold standard, if they want to abolish the Internal Revenue Service and all these other things, which they won't do, it's never going to change. So as long as it's not going to change, there are loopholes and there are ways around it. And that's why we're going to show you tonight some of the very specific ways that you are able to capitalize and actually be a bank. You're actually able to trade your money in the financial markets just like these banks. You're able to create money in the markets like the banks. If the banks can go out and create an extra $10,000 on your $1,000 deposit, why can't you? There's no reason that you can't. And Miss Faith Anderson is going to talk to you guys about how you can capitalize on the banks.
Hi, guys. Always loopholes. Exactly. There's some good comments. Yeah, that's pretty mind-blowing. When I started to really dig into a lot of this stuff, and as we were putting this together, I was pretty shocked. You know, obviously, as a trader, I see it every day. I see what happens in the markets, how the markets are affected. And that's really why we wanted to put this together for you guys, to really expose what's actually happening with our money, what's actually happening when news comes out, what the markets look like. What do our markets look like since 2017? So what I'm about to show you guys is real charts, real time, what's happening. So I'm going to screen share really fast. You guys are going to be probably blown away. United States needs to step up their game, that's for sure. That's all I can say. So let me just move everybody over really quick. All right, so you just saw Andrew talking about the dollar's worth. You know, 100 years ago, a dollar is worth $100, and now it's worth $8 after 100 years. So that's kind of scary when you think about it. You think we work really, really hard, you know, we make this money and we put it in the bank, and where does it actually go? And what's actually happening in these currency markets? And so I'm going to show you guys a couple different things right now. And I want you to be open because you're going to be pretty mind blown. So what is actually going on with the value of the US dollar, so USD, the euro, and Bitcoin? Everyone's talking about Bitcoin these days. It's absolutely mind-blowing what I'm about to show you with Bitcoin. So let me just go over to my charts really fast. And so I pretty much took everything off these charts. So normally when you look at a chart in a market, you see candles, you see wicks, you see all sorts of fun stuff. Really confusing. I wanted to show you guys each individual thing and where it's going and break it down. So for this, you guys can see the screen, right? So I'll make sure everybody can see it. Is if you guys look up here, the US dollar index. So this is our actual US dollar, and the, you know, it being strong, it being weak, it being strong, and then kind of tapering. So as you guys can see, you guys don't need to know anything about charts to understand this right now. So back in 2017, you guys will see here, 2017, this is when I actually got out of real estate. So I was in real estate for 10 years. I was a real estate broker, and I had a bunch of contracts that kept failing. I couldn't get second construction loan, the second loans of construction loans. People were being approved and then denied. They were having the terms be very short on the mortgage. So it was really hard to close something within the time frame because of the different contingencies. And so in 2017, we had a change in presidency. This is pretty normal. You guys can see, well, I'll show you on the chart another change in presidency, but as you guys can see, the value of the US dollar was up around $1.02, okay, 102. And then change in presidency by 2018, I mean, you guys look at this drop of our US dollar value, okay? So that's the drop in value there. Now you can see it tried to recover a little bit and then it plummeted again, but that's a pretty standard, there's some pullbacks here, but that's a pretty standard tank of the market, okay? Now, after that in 18, you guys can see like there was a little spike up. We had some good stuff happening. Keep it very simple for all you guys. And then you guys can see it slowly but steady. There's some pullbacks, but it was climbing up, right? We were climbing back up to almost where we were in 2017. And then the COVID outbreak happened in 2020. You guys can see down here, 2020. Right here. Can you guys see February or March of 2020 is the exact, March 2nd of 2020 is the exact day it tanked. Now, what happened in March last year? You guys can type it in the comments. Lockdowns, right? We started the rounds of lockdowns in the United States. First round, I think, was around mid-March in California. So here we have the outbreak, right? Now you guys see we recovered a little bit after that. All right, so by the end of March, we were kind of recovering a little bit, but then, it's not getting better. And then that's when our economy started to tank. Right here around July 2020 is the height of our lockdowns, right? Our economy is just tanking and continued to until around May of this year, or actually January, it started to go up a little bit. This is when we were getting a little bit of hope. They were, doing a little bit more leniency on lockdowns, things started to come out, the vaccine, all that stuff started to happen. We started to pump some money into the economy. People weren't as scared. And then it went down again, the beginning of summer. And now it's slowly but surely trying to make its way back up. But you guys can see it's still down. Look how far it's still down from a year ago. It has not even recovered, not even half of what it was in 2017. Now I'm going to show you guys the next one. Trying to move this over here for you guys. I'm going to show you guys the euro. Now this is very interesting to me. Very interesting. Do you guys see a difference in this particular market? And this is the euro. This is the same as the dollar index, the strength of the currency and its flow. Here we have COVID, around then. And then look what happened. Kind of went down a little bit, but it continued to climb. It continued to climb from May of 2020 all the way up until December. And there was a little setback, right? March 2021, they started, right before this, they started to have more lockdowns in Europe. And then it went up and then it went down. But if you guys look at what's happened compared to the US dollar. Look at this compared to the euro. Does that say something to you guys? Our economy is essentially shut down in the United States. It's taken a huge hit. What is happening over in Europe that is not happening here in the United States? It makes you wonder. Now, going to totally blow your minds because everyone's heard about cryptocurrencies. It's a big craze right now, right? Everyone's buying cryptocurrency. What are you holding? What do you got? You guys see it, big national chains are now accepting it as currency to pay for things. Look at this. No matter how much you guys want to believe in it or not, cryptocurrency barely took a hit. Cryptocurrency has increased from $37, like right here, like $634, all the way up to, it was at 55,000 a little bit ago, from that low of an amount in 2017. Since the COVID outbreak, look at this. That's insane. Like, this is an actual real-time chart right now. This is where the market actually is. If you guys want to pull it up and see what the price of Bitcoin is right now, it's going to say $54,000 or $54,801. Now, what does this look like, these charts? Now, I just showed you the dollar, the euro, which actually I have to adjust it a little bit for Bitcoin because I was a little low on my my numbers, and Bitcoin. Now I'm going to go into what's called a percentage increase calculator. So we're going to first start with the US dollar. At 2017, it was 102.905. Right now, today, this is where it was earlier. We've had a decrease of 8.55% in the value of the US dollar since 2017. Let's check the euro. Because we saw, it was climbing up, 104.56. Final value which is what it was today, 115.80. What does that look like? Well, hello. The euro has actually gained strength of 10.7% since 2017, even with everything that's happening down with a world pandemic. I think maybe we should listen to the people in Europe. What are you guys doing? Now, this is actually a little bit high because I just saw it was 600 and something, but you guys will get the gist. 1,015. And then when I looked earlier, it was here. Okay. Now, you guys are about to be mind blown. No matter what we want to say or not, cryptocurrency is the wave of the future. 5,336% increase since 2017. That's insane. That is absolutely insane. I'm going to go back over quick. I'm going to start the presentation again. If you guys have comments, we'll check them out later. Get back on here. And where I obtain that information, anybody can go on and look. Tradingview.com is where you'll find it. It's where I found it. It's what we use daily. I use daily to mark up charts, set alerts, all that good stuff. So the value of the currencies, as I just showed you from October 10th, we saw that the US dollar was a decrease in value of $8.55. But the average inflation rate is 2.78% a year. Does that make any sense? What Andrew just talked about with inflation, the value of the dollar. Our dollar is worth less, but we're paying more. We're paying actually an extra 11.61% since 2017 on living expenses and goods. That's insane. You saw Andrew share about bonds. The bonds, and I know a lot of old timers, they have a bunch of bonds. I know I have clients that have a bunch of bonds. You know, that was the thing. That's what they were taught, is to buy bonds. Well, when you invest in something, the best investment is beating inflation. You can't even do that with bonds anymore. They're only worth 1.5% increase a year. Bonds are no longer a good investment, which is a guaranteed supposed return from the government. It's pretty scary. You guys saw that the euro increase was 10.7% since 2017. Average inflation of 1.7%. So you guys can see their inflation rates over 1% lower than the United States. And then I showed you guys Bitcoin, which is an increase of over 5,000% since 2017. Now, right now, with the markets being so high, it's probably not the greatest time to buy it, but it's still going to go up. It's now being accepted as forms of payment all over the world. I help people in Africa. They've been using it over there as forms of payment forever. It's already a currency. They already know about it, where we're more scared and reserved here in the United States. Across the world, it's very common. You guys can see in Europe, they're using it in their banking system. The United States, they've been doing that. The United States now is finally, banks are finally starting to use it. Bank of America is accepting it as a form of currency. Banks in Europe have large shares of Bitcoin. The central banking system in Europe has over 53,000 coins. 53,000 coins. If I just showed you there are $55,000 a coin, times that by 53,000 coins, that's a lot of money. That's what part of the reserve is doing to help. So what exactly is this market? Right? What is it? Well, it's the foreign exchange market, the Forex market. You guys have heard of it. Well, you know, what is it? What does it do? What's the difference? Well, there's $6.6 trillion a day traded through this market. That's $6.6 trillion a day. And I'm about to show you who has a large percentage of this market. You're going to be kind of shocked. Right? And to give you guys a little tip, you know, it's open 24 hours, 5 days a week. So Sunday night to Friday night. So you can Make money anytime during those times. It's not like the bank that's 9 to 5. No, it's not that. Cryptocurrency, you can trade every single day, 7 days a week. So like I said, this is not the stock market. The stock market is about 20 to 30 billion a day traded. That's the power of currency. You can make money both buying and selling the market. You're not sitting holding something waiting for it to increase in value. You're not sitting praying the company doesn't go under right now. You're not sitting hoping that there isn't a scandal or a CEO passes away. Company gets sold. I had a friend that literally had to find his stock. A lot of people anyway that trade stocks on here. Do you ever have to find your stock because they sold it and it's under a different name now? You can't find the trade name. You have to literally Google and figure it out. They don't tell you that stuff. They're not like, oh, the company's being sold. They're not going to tell you. You pull your stocks out, pull your shares out, right? You have to have a large amount of capital to trade stock or a decent amount to trade stocks. You have to be very up and up on what's happening with all the companies and hope that you're getting the best information. So what's traded in these foreign exchange markets? Well, there's country currencies where you're pairing one dollar against another dollar. You're pairing the euro against the US dollar, what's stronger, what's weaker. Cryptocurrencies. So it's pretty cool. Cryptocurrencies, you can actually buy them. Make sure if you're buying them, it's on a reputable platform. Make sure you're not giving your money usually to invest. 99% of the time it's a scam, right? You want to be very diligent. Don't buy it on Robinhood. You don't own crypto. You don't own anything on there. Fun fact. Indices. What are indices? Well, they're like the stock market version. So we have US 30, which is the top 30 countries in the United States. We have NAS 100 and we have SPX 500. And then we have what's called commodities. You can trade US oil. You can trade gold. You can trade silver. Like I said, everything is currency pairs that's traded against the US dollar. So this is very interesting. I think you guys are going to like this. Who participates in the foreign exchange market? Guess what, guys? Newsflash, you participated in it every single day. Who on here has a Chase account? Any Citibank people? HSBC, Bank of America, Goldman Sachs, the investment firm that helps you with your retirement, helps you with investments. Yeah, the top 10 Forex traders are banks and security dealers. Do you know if you work for Goldman Sachs that you cannot participate in the foreign exchange market? It's illegal. It's against the law. It's against the Banking Trade Commission. Crazy, right? But guess what? They hire traders. They hire traders all day long to trade the money for the banks, but they are unable to trade it personally. They are unable, besides Goldman Sachs, there's other companies like Merrill Lynch. They are unable to offer it to their clients. Instead, their clients have to wait years to get their money. Maybe get 10% a year. You can make that in an hour. You can make that in a day. You can make that in a week in the foreign exchange market. So how much do they actually pay these traders to trade for them? Now, mind you, I told you, it's a $6.6 trillion a day business. So the banks and the financial institutions are making around 2.7 trillion a day. Okay. They have their staff of their traders. The average income for a trader that works for one of these institutions is $81,000 a year. The really good ones make $125,000. They're making 2.7 trillion a day. In the money. Yeah, we're going to let this person in. That's crazy. Like, how much they pay them? Nothing. 2.7 trillion. That's a lot of employees. When you walk into that bank branch and it's brand new and everyone's sitting around not doing anything, getting paid. Guess how they make the money, guys? They make it with your deposits. They make it with your mortgages that you have with them. They make it with, it's not the interest on the accounts. It's not the overdraft fees they're getting from you. They're literally taking your money that's in your accounts and they're trading it every single day. If you have that $10,000 in a savings account, that $100,000, it's yielding you what? 1%, maybe 3% if you're really lucky. While they're making 300 to 500% on your money. They're giving you a percent, like, oh, thanks, that's great. Thanks for that. Good job. Oh no, it's frozen. All right, guys, I'm gonna show you something else really quick. It froze on my slide that I wanted to show you. All right, cool, we're back. See, banking system doesn't want me to show this to you guys. How do you make money in the markets? Like I was saying, you trade currency pairs against each other. One's stronger, one's weaker. Predictions from analysis. So you're getting in and out of these markets. You're buying and selling based on market patterns. Patterns repeat themselves. What goes up must come down. Why we do this? Why we have great education that we learn from every day? Because we have a complete education package. If you guys, any of this stuff interests you, if you want more information, more events, definitely get into our community, but I'm going to show you really fast what it looks like and why I love compounded interest. Because this is what they do, but this is what you can do too. So we're going to start out, let's say $200. Like say you want to invest $200 and you're curious about these markets. And say you 4% interest a day, daily on the account, you trade, I don't know, you trade 3 days a week. It's like 156 days. We're going to reinvest 100% because we're going to keep the money in there and keep it growing. So this is what your bank does. Your bank does this every day. They keep accruing compounded interest. Now, if you go to the bank and you try to withdraw a large sum, it's going to take 24, 48 hours, 3 days sometimes to get your money. It's because they literally have to pull that money out of the markets. There's no coincidence when you go to withdraw, it takes 24 hours because that's exactly what they're doing. You guys can do that. A lot of people don't realize that. You guys can take control of your money and you guys can do this yourself. And we can teach you if you're interested. So obviously that first day, $8 in earnings. It's not crazy. You're not quitting your job. You have a $208 balance. Now that next day, when you go in, you're trading $8.32 instead of $8. So now look, your balance increases and it keeps going up. Now you're like 10 days in, now you're double, you're hitting like, ooh, $16 trades. To give you guys an idea, the markets, like the banks trade millions instead of this. That's how they make so much money. They're trading lot sizes that are, 1,250 lots, which is like, you're hitting like a $12 million trade. We're going for like $12 or even more than that, $125 or whatever your account size is. They're hitting trades that much more. Right. And so they're literally hitting trades with all that money and paying someone like $80,000 a year that just made them $12 million. It's crazy. I would actually like to see how much like the traders have brought in for a bank, like an individual trader, like a professional trader, because they can't trade. Like I said, they can't trade on their own. They're great and they're hired and they're experts, but they can't make their own money. They can't make these gains. So you're a couple months in, we're going down. Now all of a sudden, we're starting to looking good here. We're, months and months in, our $8 win, we're shooting for $319 wins. And it keeps going, you guys. The interest keeps compounding until where you're over a year and now you're hitting like $90,000 for that $200 investment with compounded interest. Now we're so used to interest working against us. We're so used to paying out interest on car loans, home loans, credit cards, you name it. We're always paying interest out. Like, what if that interest could work for you? What if you could compound the interest to make more? And that's why we came on here to share this with you guys and expose what's really happening. You know, every single day, I see in the morning, I see the markets. I see this every morning. I'll even go on here right now and show you guys. Let me see here. Oh, I got to move my little thing. Hang on. All right, let's go down to the day chart. Let's go down to the hour chart. Not much movement over the weekend. Anyway, I could show you guys. The markets open. It's either stronger week right away. The US dollar is higher at night. Market opens tanks. Doesn't maintain strength. I mean, even today it's down. Not too bad yet, but the markets are just opening. The week's just getting going. Wait till market open tomorrow. Right? So I'm super glad that you guys jumped on here. I'm super glad that you guys were able to see a lot of this stuff behind the scenes. Definitely join our Facebook group. You guys will get a lot more information like this in there. We'll be live streaming all types of stuff. We'll be having different types of events on different currencies, different strategies, different ways to make money, things about the financial markets, more things that you guys don't know. Yeah, 7 days, Melissa said. It's crazy. 7 days to get your money back. And you guys put it in there. Yep, El Salvador is the national currency now for Bitcoin. So great. So I'm excited that you guys were all on. Thank you so much for spending time with us. It's something we can never get back. I hope you guys learned a lot. And yes, make sure you're in our Facebook group. If you have questions, you can reach out to myself or Andrew or the person that invited you on. We would love to help you. And yeah, there'll be a replay post in the group. Do you want to say anything else, Andrew? Oh, you're muted.
Let's stick it to the banks because they're sticking it to us.
Did you guys see our link? It says legal bank robbers. There's no coincidence because we're getting the power back. Like, it's enough is enough right now. You know, now is the time. I know, like a lot of you guys, I was directly affected by COVID. I lost businesses from everything because my clients weren't traveling. This is a way in these markets to make money and take control of your money. It's a way for you to make money if the market's going up or the market's going down, and it doesn't matter. We're still making money. It's not dependent.
Yeah, as long as the system's broken, it's the system we're in. As the system I showed you before is a system we have zero control over. So as long as the system's broken, there's a loophole to make money out of it. So if you're not doing it, you're losing money every single day on your pay, on your money in the banks. Why lose when you can work the system? Banks are doing it. It's there for us. All you have to do is take the power.
Absolutely. We can help you with all that. So you guys have an amazing evening. Thank you so much. Stay tuned for future events. Hopefully we don't get, what is that, cancel culture now? So hopefully this is able to be up in our group and it doesn't get taken down because there's a lot of information. I'm sure a lot of people don't want us to tell people, but hey, that's why we're here, right? Someone's got to do it. Time to be bold in these crazy times. So have an awesome rest of your weekend, guys. Rest of your Sunday. We really appreciate you guys being on, and we'll see you guys soon.
Thanks, guys. Bye.